Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of January 2nd, 2025. Happy New Year to one and all. Now, let's get right into the nitty-gritty. It's early. It's just getting on to the 5:30 time frame. And as you can see, we're down. When you looked at the metal update, some of these were up, and I just did it minutes ago. So you're getting this fluctuation right down here that's very important. It is not going to be a Merry Christmas. You know that Santa did not show for these markets, period. If you go to the Yale-Hirsch method, December 26th to January 2nd. Some people extend it to the end of this week, the 3rd. Okay, but you'd need a dramatic rally to get it. It could happen, but I'm not betting on it. And does it mean anything? Well, some of these didn't work last year. You know that. And you still had a 77.8% win rate over 50 years. And that's for every year that when you put it together. Not huge gain, about 1.3%. So it's never looking for the big number. The one that looks for the big number, if it's going to happen, will be the more research one. Remember, I gave you two of them in this special report. That one's a buy on the 17th of December, and traders get out on January 12th. It's won 14 out of the past 15 years. That doesn't mean it'll win, doesn't mean it'll lose. I'm just telling you what they do. Past performance is just that, past performance. It does not predict the future, but it gives you an idea, especially on cycles and so on, what over a period of years, markets tend to have done. Past tense, have done, not what they will do. Got that? Very important. In terms of market data tomorrow, we're going to get the ISMs coming out with their manufacturing sector indices. They're looking for a 48 versus November's 48.4 level. We'll get the natural gas numbers. But the bigger issue that's going to hit financial markets, everybody's going to be glued to the set, watching to see the Speaker Johnson get a position. Does he lose in the votes? How many votes is it going to take to get a speaker? Will we get a speaker tomorrow? I mean, this thing can go into Saturday and so on. They can't do any business in the House until a speaker is elected. So it doesn't have to be Johnson. It could be anyone. And when I tell you anyone, you don't even have to be, as I understand it, a member to be the Speaker of the House. Isn't that crazy? Just the way the rules are. So we will see. If they wanted to give me a call, I'd be happy to work with them. All right. So as you start looking to see just where these markets are headed, understand that new money coming in at the very beginning of January takes a certain toll. It's a crazy week. A lot of people aren't back from their holidays. Remember, we had Christmas the middle of the week, then again this middle of the week, the New Year's. Everybody starts returning next week. The traders will be back. I saw the volume definitely better today. When we look at the S&P, you can see how the market's fighting a battle at the 18-day average of closes. How the market has stepped itself down. The pattern is one of lower highs, lower lows. Now, you had a big outside day down today. When you have an outside day down, if you take out the high of that number, it means, in this case, that breaks this pattern and says you're through with that momentum. That's typically what it means. Does it work all the time? No, but typically. But it must be done within either Friday or Monday. The second part of it is a continuation pattern. You now have still lower highs, lower lows. And so until it's broken, it's not broken. The support, most likely the 100-day average with the Bollinger Band. Notice how the market came down to them, it stopped, and you got to bounce. But the trends of the market are down, not up at this point. It's oversold. I don't think you're attracting new selling down here. I think these are longs that held out, got frustrated with the Santa rally not developing. They thought they'd get more, including me, and you didn't get the more. It's just that simple. In the NASDAQ, market's down, keeps breaking on you. Not an outside day, just keeps hitting the Bollinger Band and not able to get away from it just yet. In the Dow, like the S&P, an outside day down, and the resistance has been coming in and supports both sides at the 100-day average. When the two in the Bollinger Band, when the 100 and that came together, you bounced away. Now it's proven to be resistance. Take this number, take today's high, Thursday's high out, which is today. I don't know why I thought it was Tuesday. And I think you'll go to the 18-day average. That's not a big whoop-de-doo. So, nothing I can say about it that way. And in the Russell, this still stinks. Lower highs, lower lows. And until interest rates drop, you got to get to the point for this market to work where it believes that interest rates have peaked out and they're headed down. That is when I believe the Russell will come alive, not until then. In the 10-year notes, you're just drifting sideways. Now, the interesting thing here is you lost the bearish embedded reading. So unless it regains tomorrow, the odds are, before the market takes out this low, the odds are price and the 18-day average now are going to make a run at each other. The 5-year did the same, and it's the same thing. Before you take out that low, it looks like that. I've been teaching in the Spider ETF this theory. If you get that subscription service from me, we covered all of December now, and we had 16 trades losing readings, and I give them where the objectives are, and they change every single day. The stops don't change. And I think there were 14 winners, 2 losers overall. But you got to be a subscriber to know more about it. You're not in it. I don't discuss it other than just telling you. I told you I was starting a new service with it, and this is the alpha version of it at this point in time. When we now come to the dollar index, up to the upper Bollinger Band. I know that just recently I told you we had a price count that goes into the 109.80s, if I'm right. We're not too far away. We had gotten a 109.36.5 today, and you still have the embedded reading. I do think the pros took some money off the table today. I'm aggravated because I had my clients trading on the long side, and on Tuesday, I told them, nah, let's cash in, take your profit, which is a good word to always have. Don't always make profits. I think you know that. And boom, today was a bigger day. Okay. I didn't want to go through the new money coming in the market and so on and so forth. And they only had a half-size position, so that wasn't a matter of can you trim and still hold some. Now we're back to coming out with recommendations for full sizes. Higher high, lower low, and away. By the way, I do that when volume's light or in front of reports that could affect the market. Maybe I don't want to be in the report at all. Other times I do, but I want to be very careful until we know something's going to happen. You get that all the time. So it's just called paring back your bet. In the British pound, they just pulled the plug on this today. This little bit of a rally that had attempted, just down. But the whole key has been you've stayed under the 18-day average now since mid-December. And since way up here in the 132s, I remember telling people put on your hedges and look out for this to move. You're going to get 2, maybe 3 rate cuts according to analysts this year. That's going to weigh as the Fed is stuck. Did you see today's unemployment claims? An 8-month low. So people aren't claiming for unemployment. That's not a sign of weakness in the labor market. Maybe I'm reading it wrong, but I don't think I am. In Bitcoin, nice bouncing off the Bollinger Band into the 18-day average, too oversold to deploy short money. That's how I'd read this. In a downtrend, but too oversold, and I think the pros covered against the Bollinger Band and walked away. Now, you've been getting a spike rally. In fact, this is one of these vertical rallies. Why? Every single day has made a higher high. You didn't take out a prior day's low in there. Now you're getting up to the big number, and that's going to be the 76, 66 level, or 66, 200-day average. That's where I think you'll peak out in the market on this run. We'll see if I'm right on it. You're fighting that battle right now in the February. So you got over for the first time the 200-day average. You've done that before. You don't stay over it very long on the first challenges of it unless there's something in this market I don't see, and that could be. I mean, I could be blind. But typically, I think that this is just an area. Shorts got run out of the market. A lot of people were very bearish. It was report after report coming out. It's going to be the year of too much supply, not enough demand, the dollar's strong, and they ran the market the other way. Almost a perfect setup of the opposite. Heating oil coming up. Well, we've got that cold vortex that's going to be with us most of January. This isn't just coming in for a couple of days. You're going to get a lot of natural gas and heating oil demand because of that. You didn't stay up and over the Bollinger Band, but you're not doing much in this anyways. You have a higher high, lower low pattern. I don't see anything to do. So, as I said, my sale is coming to an end. Want to take advantage of it? It's really simple. Normally, my core charting course, that's the big one, and I'm telling you, it's big. There's many video chapters. It's hours and hours of videos. Ideally, you sit there, you learn, you move on to the next chapter. You sit there, you learn. It's not a race. You got plenty of time to master this, and you will if you take your time with it. And you get another course for free. You can then pick for free with this. Not only do I cut that in half, I then give you free the Bollinger Band or the Outside Day course, $120 value. All in all, when you add up the charting software, I give you limited subscriptions to my research so you can see them for a certain period of time, access to special reports, which I'm going to start right now, $596 in value, all for $299.95. You won't get this again this year. So if you're looking to say, well, I can't get it right now, I'll pick this up later, you will. I'm going to offer the courses, of course, but not at this super low price. So this is it. Gets a lot of people going. It's my way of saying thank you, and let's kick off the year right now and get ourselves with everything. You just go to iraepstein.com. When you get to the website, all you do is look on the top left. It's right there, New Year's charting course. Just give that a click, or there'll be a cursor up here. Give it a click. It'll take you there. I'm Ira. You have a great evening. I'll talk to you all tomorrow morning.